Well, he is everyone's least favorite candidate. I mean, to me, look, the main criticism I have of Kevin Warsh is lack of judgment, okay? Because the his performance during the financial crisis was not a particularly good one. Um, and I think you could say, arguably, that it is disqualifying. I mean, to be that concerned about inflation at a time when the unemployment rate was rising very rapidly, it kind of strains credulity. And in the years since, everyone makes bad calls. Okay. I mean, I was market street economist for a while. I've made bad calls. Everyone makes bad calls. The issue is when you make bad calls and you're always wrong in the same direction, that to me
Right.
shows open-mindedness.
I can't say enough how I agree with that. Not for Mr. Warsh, folks, but part of the game is to be wrong and learn from it. You call him a cookie cutter Republican coming off of Bush the Younger, the idea that he's a sweetheart of Wall Street, and you say it's time. You equate it here to say Warsh would make sense if Mitt Romney was president. Donald Trump is not Mitt Romney. Discuss the card carrying Republican dealing with President Trump on a meeting to meeting basis.
Well, think about I mean, President Trump, I think, relative to the median Republican official, at least in my lifetime, has much better monetary policy instincts. I mean, remember, there was a time when people like Paul Ryan and Mitt Romney were talking about changing the Fed's mandate to just purely a price stability one. It's
Right.
people like Kevin Warsh that love that, right? So, President Trump, by contrast, in many cases, got the nomination by bucking a lot of the traditional Republican orthodoxies, right? On trade, on immigration, on social insurance, on the Fed. Um, and so I think that's what makes this so perplexing for, the so-called greatest jobs president that God ever invented. He's picked someone that's, frankly, based on his record, a threat to working people. Okay, so a member of the sort of MAGA movement, Kevin Warsh is not. Okay, and that's why I say, I mean, remember, there's also he has a track record too, right? I mean, he's critiqued previous administrations for not pursuing free trade deals. Now he's being nominated by someone that's trying to, you know, rip
Yep.
up the sort of global trading system and try to
Right.
kind of move it toward
Yep.
the U.S.'s favor, America's favor. So that's why I say, like, if you think that this is sort of a populist pick, if you think this is, um, someone that's a member of the sort of president's base, I'm not so sure about that.
Right. Hey, Neil, given this nomination, what do you think Fed Chairman Jay Powell will do?
Well, as I say, I mean, Kevin Warsh's newfound dovishness. I mean, all of a sudden, now that he's in the sort of public interview process for this job, all of a sudden he likes rate cuts. Okay, so that suspicion, I think, is going to pique the interest, or that about face from Warsh is going to pique the interest of not just Jerome Powell, but a lot of the people around the table at the FOMC. Um, so if you're Powell, I don't know. Maybe you want to stick around a little
Yeah.
bit longer, see what's up.
Interesting. Interesting. Good morning, everyone. Neil Dutta with us. Jay Hatfield on deck. Claudia Sam coming up later. This is a special edition of Bloomberg Surveillance across America. Kevin Warsh, nominated, I should say, by the President of the United States to replace Jerome Powell. Of course, confirmation by banking is necessary. Neil, I want to polarize here the vector of Stephen Myron and Michael McKee speaking with the Governor Myron this afternoon, who's looking for a hugely accommodative Fed with the natural restrictiveness of Kevin Warsh. I mean, basically, Myron and Warsh are polar opposites that I can see in terms of tone. Discuss that. Does the president understand this is not a Myron replacement?
Yeah, I'm not so sure. I mean, I think, look, I mean, the president is trying to find someone that that sort of believes in this notion of a golden age, of strong productivity growth, lower Nehru, I guess. And maybe he's found his person in, maybe he's found his person in Kevin Warsh. You know, Steve Myron's been making similar arguments. But again, I mean, look at the, look, Tom, I mean, has Myron been successful in swaying the committee to his point of
Right,
view? He has.
this kid comes out of Albany. He ends up at Stanford under the guise of Michael Boskin and John Taylor. He's got a shingle out Neil Dutta at the Hoover Institution. This screams to me restrictive GOP economics. Am I wrong on that? Jay Hatfield's over here nodding. Am I wrong on that?
No, I mean, look, I mean, this is someone that he clearly overweights the inflation side of the Fed's mandate relative to employment. Okay, I mean, I don't think that that's a particularly controversial thing to say. One thing I would say, though, is that you've heard a lot of folks in the administration talk about how they want the new Fed chairman to kind of pull an Alan Greenspan, right? And so the idea here is that in the 90s, Tom, as you know, Alan Greenspan resisted the temptation to raise interest rates in the mid 90s because productivity was strong and inflation was slowing, right? Now, if you actually go back at the time, I mean, that was coming off of a period where inflation had already been slowing. So that was sort of the opportunistic disinflationary years, right? And if you look at that time during the 90s, what was Greenspan really doing? He was really just following a Taylor rule. So the reason why they didn't hike in the mid 90s is because the data were more or less telling them not to hike in the mid 90s. I mean, yes, it is true the unemployment rate was declining, but inflation was also rapidly falling. And the combination of those two things is why interest rates didn't go up. The policy rate, that is. But, rarely is it mentioned, when you talk about pull a Greenspan. Look, think about what happened in the late 90s. There was an aggressive hiking cycle. About a year after the LTCM blow up. And why was that happening? That was happening because the labor markets were red hot, right? So again, I mean, we were having maybe a golden age then too, right? And we had strong productivity growth, but because the labor markets were on fire, Alan Greenspan rapidly increased interest rates. So this notion of like pulling Alan Greenspan, I think it's a bit of a it's a bit of a choose your own adventure.
Yeah. Neil, how controversial, if at all, do you think this confirmation process will be for Mr. Warsh?
Okay.
I mean, it's hard to know. I mean, I think there's obviously a lot of things going on in the background, right? I mean, Senator Tillis has basically said that he'd slow down the nomination process so long as this investigation into the Fed and, Jerome Powell remains open. We'll see if he means that, but that could presumably slow the process down a little bit. But as you know, guys, I mean, this role has become less sort of bipartisan, right? Like in my career, it was sort of every person that's been up for these jobs, Yankee, has had a thinner and thinner margin in the Senate when they've gotten confirmed.
Neil, I got to get to Jay Hatfield, but let me frame this out. We're going to go to Hatfield. I'm going to ask him the same questions, folks. Neil Dutta, right now, and you've been phenomenal about the labor fragility of America. What is your real GDP forward that Chairman Warsh is going to deal with, and the inflation overlay that's going to upset him to get the nominal GDP? How do you frame that out through the rest of the year?
Well, I mean, for me, Tom, I have a very much a sort of labor market driven view, and aggregate hours are barely rising, and wage growth is slowing. So, I think we're basically on track for, essentially a 4% nominal growth environment, maybe even a little bit lower than that. I mean, if you look at wages and salaries over the last couple of quarters, it's been quite. So really, you have to tell a tale for why the labor markets are going to strengthen, and it's hard to do that right now because look at what consumers are saying about the jobs market.